Everyone is focused on the Fed this week. The truth is, it's not just about the interest rate call. The dot plot and Powell's comments are what's really going to shake up the markets. Those tiny dots, plus a few words that comes from Powell, can move trillions of dollars, especially help move gold and U.S. equities. So right now, I'm going to break this down and give you guys some trade scenarios. But first, what is the dot plot, right? And let me just answer that for you guys. Very simple. Okay. So the dot plot shows each Fed official sees where interest rates are going in the future. Okay. Higher dots, right? That's higher in the chart will lead to more hikes, higher for longer perspective. Okay. Lower dots that is moving down the chart is going to be leaning towards more rate cuts coming in sooner. Markets don't trade today's decision. They focus on the future outlook. Okay. So let me just give you guys an example of what the dot plot looks like here. Like this is like a really good example. And this was in March, right? So I'm gonna have the websites in the bottom as well, so you guys could search it for yourself. But as you could just see, this was the last dot plot that came from the Federal Reserve. So you could just see that these numbers, like look at these little dots, right? And then at the bottom, you could see the year. So for this year, you could get the overall projection of them expecting interest rates just to be about lower. Yeah, it's a little hard to see. Let me try to zoom in here for you guys. Bam, there we go. So you could just see right here that the majority of members are voting for a 3.9 interest rate for this year. At the bottom of 2026, right? You could see the majority is expecting 3.4% at the end of the year. And then 27, they're expecting a 3.1. So that's what we're going to focus on. If this chart is going to most likely be different with the next dot plot. If we see that these numbers overall, that the majority of members are lower, then that's what's going to give us that dovish reaction. Okay. And later I'm going to go over those scenarios, but I just want you guys to like really get a visual of it, because you're going to have to compare this dot plot to the one that's going to come out for the next FOMC. Okay. If the majority of numbers are higher, that shows that they're not expecting to cut rates as much as what we thought. That would give more of a hawkish outlook. Okay. So that's what we're going to focus on. Why? Now let's talk about why Powell's words matter, right? Because after the dot plot is released, Jerome Powell is going to have a press conference. Sometimes the dot plot looks hawkish, but Powell could downplay it and turn the markets actually dovish, right? So we just have to be aware of his testimony. Like at first, when the number, like they could cut rates 25 basis points, then the dot plot could show one thing, but Jerome Powell's comments could be something totally different. So we have to pay attention to everything as a whole, okay? Other times the dot plot looks dovish, but Powell sounds worried about inflation. That could also turn the markets hawkish, right? So always combine the dot plot with Powell's tone to get the full picture. All right, guys. So that's what's going to be important. And usually, like, we could get a little statement, you know, like you could just get like a little statement and you could see this is his press conference that he, you know, just giving you guys an outlook. That's how it looks. And this is exactly what we pay attention to, and we listen to what he says so we can get an actual tradable opportunity, because he could actually give us some details about forward guidance, right? That could lead to some really good tradable opportunities in the future. So that's why that's extremely important. And also moving forward, looking at this is called the CME group, right? This is where we get those rate projections where they pretty much let us know what the markets are expecting to go with interest rates. So usually when important data comes out, right, you want to look at what is the markets expecting from this data? How is it going to impact future rates? So so far with how the data is coming out, we can see that it's you could just say like it's 100% confidence, right? Right now, the markets is going to cut rates next meeting by 25 basis points, but that's already priced in. It's already expected. So if they do a 25 it's not really going to change anything. Okay. The surprise is what's going to be the bigger opportunity would be if they pause rates, right? Or if they ever do a hike. A hike is not going to happen, but what happens if he pauses rates? That will be a surprise, you know, because there's a no percent for a zero. You can see there's a no percent for a pause rates, but there's like a 3.4% chance of a 50 basis point cut. If we do get that, that would also surprise the markets as well. So that's why this is important. And we're going to be looking towards whatever happens this meeting. We're going to be looking to see how it impacts October's meeting and also December's meeting, right? Because markets is already fully pricing in a cut. But if we do get a cut, is it going to be a 50 basis point cut or is it going to be a 25, right? How is the rates going to be in January? So whatever happens this meeting is going to impact October's decision, December and January, right? So that's why the forward guidance is extremely important. Okay. So now we're going to talk about scenarios, right? When it comes to Hawkish dot and a Hawkish Powell, because when we're looking at these scenarios, right, we want to take advantage of the best, easiest opportunity. So what we want overall is to see if we get a hawkish scenario, the dot plot is higher, we get a Hawkish Powell, right? His comments are hawkish. We're going to see dollar pretty much push higher, right? Ideally, we're going to see dollar gain strength. That would most likely weaken gold, right? And then we're going to see the equity markets push lower. Okay. So equities will fall, dollar will rise, gold will push lower. Dovish dots. Now, say if those dots are lower and then we get a dovish Powell, that will usually weaken the dollar. We're going to see the dollar drop aggressively. We're going to see gold rise, and then we're going to see the equity markets rise, like NASDAQ, S&P, and US 30. Okay. If we get mixed signals, which is a possibility, right? If we get a hawkish dots, but Jerome Powell is more dovish in the Q&A, we could get choppy reactions, right? The markets could react initially to the dot plot and then do a complete reversal when Powell speaks. Okay, so this is where you have to be patient, try to take your scalps, because at the end of the day, we don't know exactly what to do, right? We don't know exactly what he's going to say. That's what I mean. But how to trade it, right? This is like one of the best things. And obviously I do trade live with this and I give opportunities and scenarios, right? So you don't want to take the initial move because you want to wait until price breaks structure. So I'm gonna just use gold as an example right now, right? And you can use this with equities, whatever. But first, if we get hawkish, we get a hawkish Powell, right? Let me just give you guys, we can look at the dollar. We can see that Powell comes out hawkish. The dots are showing more pauses. We want to see if dollar breaks above structure. And when dollar breaks above structure, we'll be looking for our entries as we start breaking above resistance. Okay. And then you want to see if the yields, right, especially like the 10 yield is a good example. You also want to see if the 10 yields also rise as well following that. And then when we get that opportunity, that's when, if you guys are like to trade gold, if you like to trade equities, because we're expecting a hawkish reaction, then that's where we can see, oh, let's take advantage of gold breaking below a key area support following the data. And that's where your opportunity will be at the break of structure. Okay, so usually that's like a really good setup. But if you guys want help, right, to trade these events and get better at that, go into the comment section and join the private group, okay? Or just message me, send me a comment if you need help, or just don't hesitate to reach out, guys. I want to help you guys out. So now, hopefully this is extremely helpful for you guys, right? If you guys like these type of videos, please give me a like for the algorithm. Also give me a comment and definitely hit that notification bell. So when I send these videos, you could watch it right away so you could take advantage of these trades. Have a good one, guys.